Oh, baby. Now, this is the week we get serious. The most anticipated earnings for the week of July 20th. This is the week we get serious. There's a lot of major companies right now. I'll be pointing out four that I'm kind of looking at, but I'm looking at a vast majority of these, right? I'll be very interested in all of these companies. So let's take a look and see what we have going on. Before open Monday, we've got Halliburton, Bank of Marin, Manpower Group, CM, Phillips. I mean, no real insight on Phillips. Yeah, you think about the couple different products, obviously, they carry as far as appliances and even stuff like toothbrushes, shavers, really home products. You definitely anticipate a downward movement in terms of revenue for this company because they really benefit off the back of retail. And in this quarter, with retail being shut down for probably half of it for them, they likely are going to see a pretty big decrease. So, one thing to anticipate for Phillips, we've got Old National Bank and Lennox. Now, one of the ones I did want to focus on is here after close, where we've got Logitech. And why would I do that? Well, obviously, as the number one computer accessory seller, you think about what exactly they have to benefit from here. So, in my opinion, as far as potential benefits we see from the current environment, it is the stay-at-home office, right? The stay-at-home worker is massive right now. And in my perspective, not only is this going to be just during, times of pandemic, I can guarantee you a vast majority of these companies are going to be letting their people work from home for a long time after this. So the importance of a home office is very important. So that includes getting accessories for your computer, right? We talk about keyboards, mice, microphones, whatever it might be. Logitech can supply it. So this is a company, if you look at the expected earnings, you see EPS is expected to fall to 34 cents versus 39 cents of a year ago. Nothing major, obviously. Every company is really losing in terms of EPS for the most part, so that's not a shocker at all. And revenue estimated to be $689 million, which is only really a 9% increase, which is big for a company like this. 9% increase is big for a company like Logitech. So I honestly do anticipate they'll probably miss on that revenue number. I hate to say it, but just because of, again, I talk about the reliance in retail. Retail's massive here for a company like Logitech. It's where a lot of people buy their products is at these retail stores, and most of these, even electronics places, were deemed not essential. So obviously they'll still show some positive growth, over 5% in my opinion, but I don't think they'll necessarily hit in terms of that 9% goal there. And I could be completely wrong, but that's just what I can expect from looking at companies like HP as well. So could be wrong, and I hope I am actually. But after them we have IBM, massive company here. Their intelligent cloud just continues to boom. I mean, IBM is a very big company for the future. They know exactly what they're doing. Definitely an earnings you should be looking at because this is a good core holding in anyone's portfolio. There's Limelight Networks, Cadence, Agree Realty Corporation, Crown, Zions Bancorp, American Campus, Equity Lifestyle Properties, and Steel Dynamics. No real insights on any of those ones off the top of my head that I can think of. So we'll move on to Tuesday, where we have some more giants. So we've got, we'll look at this. Coca-Cola. And this one I'll entirely pull from Pepsi for when I see that Pepsi actually saw a 9% decrease year over year in terms of earnings, or I should say revenue. Now, I personally think Coca-Cola will hit a much worse number, and there's many reasons for that. So Pepsi benefits from the fact that they own Frito-Lay. They have a snacking portion to their business that wasn't really impacted, where Coca-Cola is more reliant entirely off drinks, right? If they're entirely reliant on drinks, the hit that they'll take from restaurants being closed is going to be a lot more significant than what you'd see at Pepsi. So for that reason, I anticipate a obviously more than 10% decrease year over year in terms of revenue, and EPS likely takes a decent hit as well. We talk about shortage in canning, so there's just a lot more expenses that have come up that EPS is going to be not beautiful for this company, and I think we're going to see a revenue decline over 10%. But overall, I look for good levels to add Coca-Cola because it's a really good company, all things considered, as far as just being a staple for the portfolio. After that, we have Lockheed Martin. To my knowledge, spending on military has not actually been impacted at all. Obviously, we're not really in time of war. In fact, we're pulling out of most places. So I would like to see what necessarily that has. But regardless, the U.S. is always stocking up its military no matter what. Even if we're in time of war or not, we're always stocking up our military. So Lockheed Martin shouldn't see much of an impact, actually, all things considered, besides probably the cost of materials like the steel that they use. So that could be an impact for sure that you need to consider as far as EPS is concerned. But revenue-wise, I feel like they're going to be hitting their normal numbers. Philip Morris is most well-known really as a tobacco company. And if you look statistically, the rates of people smoking has been dropping significantly over the past 10 years, 15 years really. So smoking falls, but I did want to mention too, in times of crisis and really in times of recession, I should say, people do turn to bad habits. They turn to vices such as smoking. So I think they could see a benefit because of that. I don't really usually invest in these, as people like to call them, sin stocks. The alcohol and tobacco companies don't really invest in them, but especially when you think about the long-term business model, Philip Morris being in the tobacco industry that's dying, not really a good company to be invested in my opinion, for the long term. After then, we have Prologis, Novartis, Organogram, Synchrony Financials. Again, another financial. We like to look at that, see how these companies are doing in all of this. CIT, Comerica, and Graphic Packing. Ooh. Graphic Packing. That's not the only thing that's packing here, you know what I'm saying? After close, we have Snap. With ad rates hitting pretty big lows during this quarter for them, I'd like to see exactly how this looks for them. Not a company I personally like to invest in, but they will see a big benefit in terms of user base because of lockdowns, right? Because people have nothing to do, so you know what they do is they use social media platforms. So my question is the addition of users going to be enough to offset the fact that they're probably going to post an awful EPS number? And I mean awful. But is that going to offset it? The stock is still, regardless, up like 90% on the year. So all things considered, there's likely going to be some puts purchased by me. I'm just going to be honest with you. I might be buying some puts on this company because I think at some point this massive bull run, it's going to end. Even though it is right around where it was at the IPO, but still, I don't like the company that much. After them, you have United, Texas Instruments, Intuitive Surgical is a really interesting company. I highlight them specifically because of the fact that, well, we've really zoned off a lot of hospitals and really cut down their budgets significantly because they're zoning off areas specifically for coronavirus, right? And we're talking about EPS going to fall from $3.25 to 74 cents expected. Even next quarter, only $2.15 expected when they posted $3.43 a year ago. That is crazy. So full year, they're only expected $8.80 versus $12.76. That's incredible. They are expected to recover next year, but still, it's going to be a very bad year for them. And revenue is expected to decline 40% and 11% for the full year, which this is a company that was growing massively, right? And I expect that 40% to be 100% accurate. I think it could be worse than that. because right now places aren't purchasing that equipment. Hospitals aren't, because they're furloughing employees. They can't even afford what they have right now, because well they're not getting the money, right? That's some people would say the issue with the for-profit really healthcare system, that now that they're being forced to only take care of certain patients, they're not making money. So therefore, what are they supposed to do? After them, we have Teradyne, TD Ameritrade. More people are trading than ever. I have someone who works there that has told me they're adding accounts like wildfire lately. So interesting to see what that looks like as far as their assets under management. After them, we have iRobot. Really, EPS is going to be an ugly story for this company as far as transit and just supplies. It's going to be an ugly story. But I don't know what to say about it. Revenue could be good, but I like iRobot. I just don't like it in these times. It's a little bit rough. After that, we have Capital One, another financial. Interactive Brokers, another brokerage. And Calix. Now, before open Wednesday, we've got NASDAQ, Biogen, Thermo Fisher Scientific, KeyBank, Market Access, Checkpoint, HCA, ABB, and New Residential, NRZ as we might know it. NRZ, definitely looking at that one, obviously, because it's a decently large holding for me. And, obviously their dividend is massive for a lot of people right now. They raised it, they doubled it from 5 cents to 10 cents, but before that, they lowered it from 50 cents to 5 cents. So, interesting to see where that dividend looks for them, and this will be a good insight as far as that's concerned. These earnings will. Then Canadian Pacific. After close, we have the massive ones in Tesla. So Tesla is expected to see a negative 71 cent EPS, which is honestly still better than a year ago. So I'd be somewhat shocked if they hit negative 71 cents. I really don't think they will. I think it'll be a worse number than that. I really do. And as far as sales, you're expected a 19% decrease in this quarter. For that, I did want to mention a decrease is not a beautiful looking thing, especially when we talk about companies like Ford even showing in the past couple months that they've actually grown. And this, Ford's been in a rough spell. So if Ford's showing growth, you'd really like to see a company like Tesla do the same. So I'd like to see some more details as far as these earnings are concerned, but they're still expected to go back to growth later this year, and for the full year, expected growth as well. So that is something to consider. After that, we have Microsoft. Microsoft is a company that is expected $1.38 EPS, which grows a year over year by 1 cent. Expected to grow EPS year over year total pretty big, so that's exciting. Sales growth expected of 8.2% this quarter. I don't like that. I don't like that number they give. I think it should be a beat on that aspect. 8% is kind of low. You think about, obviously, I talk about home office, Microsoft Office, Microsoft Azure, the cloud platform is obviously going to be outperforming as well. Video gaming has been out of control. I mean, Microsoft has so much going for it right now in this current time that I don't see them I see them increasing 10%, is what I should say. I don't see a situation in which they don't increase 10%. So I think overall we're going to see a 10% revenue increase for them. And then we have Chipotle, probably going to get hammered. Sorry, this is just the fate of fast food right now. Align, Kinder Morgan, Netgear, you think about routers. And again, we talk about home office, and that's definitely a very important aspect to it. Internet is massive, so Netgear could see benefits there. CSX, Whirlpool, another appliance company, could be good. Las Vegas Sands, likely going to be a historically bad quarter, but we expect it because no one's doing traveling, no one's doing that. But you hope for a positive message from them as far as what the future could hold. Gambling is down, travel's down, so we'll see. Thursday, before open, we have Twitter. Now, this is a massive one to look at because, well, this is a company that, Jack Dorsey needs to make comments about this hacking that just happened. They need to make comments. Is people's information safe? I don't know about that. I don't like Twitter personally, so whatever happens, happens. But in my opinion, if you sign up for a social media platform, I mean, what happens, happens. I mean, if you put that much information out there that you could be hurt by that, well, that's kind of on you and not on the company. Just gonna be honest with you, but still ridiculous that Twitter stock grows and grows. But user growth is gonna be a good story for this one, obviously. Pandemic, more people are gonna be using it because they have nothing else to do besides be on social media because they can't communicate with people in person for the most part. So there you go. After them, AT&T, definitely one to look at, no doubt. American Airlines and Southwest are going to have, yet again, awful quarters. Ticket price is still extremely low. People are starting to travel now, though, so they will have some probably positivity as far as next quarter is concerned. But this quarter, don't expect much. Tractor Supply Company, Citrix, the Blackstone Group, Cintas, ST and Dow. After close, we have Intel. How many times do I gotta mention home offices, baby? I gotta mention it here again. Intel, obviously number one as far as processors for most of these computers that are gonna be used for really home office purposes. This is a company that will be making the processors for most of those. Sorry, it's gonna be your i7 processors. This is what they're gonna use. They're gonna use Intel processors. Because they don't need the heavy-duty ones for gaming. You could even use the Intel ones for gaming if you wanted to, but I'm just saying. After them, Skyworks, massive company for 5G. Not quite expected to see the benefit really yet, but they will. Skyworks is going to be a very, very good company. We're talking about next year. The benefit's going to be big. We have eHealth, Samuel Adams. Drinking's up, so Samuel Adams probably sees a good benefit in terms of revenue. Alkaline Water Company. Yamana Gold, Discover, Financial, E-Trade, VeriSign, and Skechers. If Skechers does anything like Nike, which I expect it to, you're going to see a very bad EPS number, just so you know. So just be on the lookout. Friday, another Telecom and Verizon. We have American Express. Honeywell, who's been really getting paid to make masks as well as ventilators, so I'd like to see what exactly that looks like as far as their bottom and top line. I said that backwards, that's fine. NextEra Energy, Schlumberger, Gentex, First Hawaiian Bank, and TRI Point. So those are your expected earnings, most anticipated for the week, and I really did hope you enjoyed this, and I hope I gave you some insights today.